the Income Tax Department Act, 1988 and the Black Money Act, 2015. The Income Tax Act, 1961 has wide scope and empowers ITD to levy tax on income of individuals, firms, companies, local authorities, societies, or other artificial juridical persons. Therefore, Income Tax Department influences businesses, professionals, NGOs, income-earning citizens, and local authorities among others. The Act empowers Income Tax Department to tax international businesses and professionals and therefore ITD deals in all matters of double taxation avoidance agreements and various other aspects of international taxation such as transfer pricing. Combating tax evasion and tax avoidance practices is key duty of ITD to ensure constitutionally guided political economy. One measure to combat aggressive tax avoidance is general anti-avoidance rules. Taxation has been one of the key functions of the sovereign state since ancient times. In Manusmriti, the Manu stated that king has the sovereign power to levy and collect tax according to Sastras. Lokai Chakaradigrahano Shastranishthah Syat. Sandeep Baldi, Shyamnagar 128. Manusmriti in Bodhyana Dharma Sutras, it is mentioned that the king got 1/6 part of income from his subjects, which was legally termed as tax. In lieu of this tax, the king has a duty to protect his subjects. According to Kautilya's Arthashastra, an ancient treatise on the study of economics, the art of governance and foreign policy, Artha has a much wider significance than wealth. According to him, the power of the government depended upon the strength of its treasury. He states, from the treasury comes the power of the government, and the earth, whose ornament is the treasury, is acquired by means of the treasury and army. In Raghuvansh, Kalidas, eulogizing King Dilip, said, it was only for the good of his subjects that he collected taxes from them, just as the sun draws moisture from the earth to give it back 1,000 times. The 19th century saw the establishment of British rule in India. Following the mutiny of 1857, the British government faced an acute financial crisis. To fill up the treasury, the first Income Tax Act was introduced in February 1860 by James Wilson, who became British India's first finance minister. The act received the assent of the Governor-General on July 24, 1860, and came into effect immediately. It was divided into 21 parts consisting of no less than 259 sections. Income was classified under 4 schedules. I. Income from landed property. E. Income from professions and trade. E. Income from securities, annuities and dividends. And IV. Income from salaries and pensions. Agricultural income was subject to tax. Subsequently, many laws were brought to streamline income tax laws. For example, super-rich tax was introduced in 1918 and new Income Tax Act was passed in 1918. But most important among all these were the Income Tax Act of 1922. This Act of 1922 marked an important change from the Act of 1918 by shifting the administration of the income tax from the hands of provincial government to the central government. Another remarkable feature of this act was that the RALAs were to be enunciated by the annual Finance Acts instead of in the basic enactment. Again, new Income Tax Act came in 1939. The 1922 Act was amended not less than 29 times between 1939 and 1956. A tax on capital gains was imposed for the first time in 1946. Although the concept of capital gains has been amended many times by later amendments. In 1956, Mr. Nicholas called to investigate the Indian tax system in the light of the revenue requirement of the second 5-year plan. He submitted an exhaustive report for a coordinated tax system, and therefore, the result was the enactment of several taxation acts, viz. the Wealth Tax Act 1957, the Expenditure Tax Act 1957 and the Gift Tax Act 1958. The Direct Taxes Administration Inquiry Committee, under the chairmanship of Sri Mahavir Tyagi, submitted its report on November 30, 1959, and the recommendations made therein took shape of the Income Tax Act 1961. The 1961 Act came into force with effect from the 1st of April 1962 by replacing the Indian Income Tax Act 1922, which had remained in operation for 40 years. The present law of income tax is governed by the Income Tax Act 1961, which has 298 sections and 4 schedules and is applicable to whole of India including the state of Jammu and Kashmir. Administration in Income Tax Department. Most extensive and famous among these being Directorate of Investigation. The Central Board of Direct Taxes is a part of Department of Revenue in the Ministry of Finance. The CBDT provides inputs for policy and planning of direct taxes in India, and is also responsible for administration of direct tax laws through the IT department. The CBDT is a statutory authority functioning under the Central Board of Revenue Act 1963. The officials of the board in their ex officio capacity also function as a division of the ministry, dealing with